Bitcoin or gold, which should you be investing in 2026? So I saw this tweet and I knew that I had to bring it to you guys. It says, I sold all my Bitcoin. Just realized that it's not backed by anything and has no intrinsic value. I'm going to buy gold with all of the proceeds. The world always moves from digital back to physical. And I want us to talk about that in this video. This tweet resonated with me because even though I've been investing for over 5 years now, I will still consider myself a moderate investor. So I'll do a separate video where I'm explaining a low risk, moderate, and high risk investor. So as a moderate investor, what that means is that even though I understand investments, I still want to make sure that my capital is kind of safe while I'm investing. And there are certain instruments or certain assets or certain investments that are more volatile than the other, which means they can go drastically up or drastically down. I like to stay somewhere in the middle. And right now, people are rethinking digital only assets. And an example of a digital asset is Bitcoin. So what is Bitcoin? Bitcoin is a digital asset with limited supply. It's not controlled by any government or by any central banks. And you might be wondering, how did Bitcoin even become valuable? The first thing is scarcity. So not every single person in the world has access to it, especially now that it's a bit more expensive. You can't just wake up immediately and go and buy it like you're going to a store to buy Bitcoin. The second thing is that people agree that it is valuable. So no matter what it is in life, if we all come together and agree that something is valuable, it will become valuable. So Bitcoin is valuable because people came together and agreed that it is, and that it can also be exchanged for value. And an example of that is money. We all came together and agreed that this piece of paper is valuable and I will pay you this paper for your skills, for your expertise, or for your time. And the thing about Bitcoin or other types of digital coins is that they can be complex and highly volatile. So when something is volatile, it means that it can be like this one day and like this the other day. One thing that also makes it a bit complex is what I mentioned earlier, that it is decentralized. So you can't really say one person is in charge of Bitcoin, or a body, a government is in charge of printing Bitcoin or distributing Bitcoin. So that makes it just a bit more complex. But now let's also talk about gold and then do a comparison between Bitcoin and gold and what I would typically advise someone who is, say, a family member to invest in 2026. So what is gold? Gold is a physical, tangible asset, but can also be limited. Even though most people can walk into like a gold store and access it immediately, but it also doesn't mean that you just have gold laying around randomly that you can go and pick up. It is a valuable asset that is limited because this is something that is also mined. So it's not like it just grows on trees. People spend hours and hours to access it, to refine it, and then to sell it. But the good thing about gold is that it has been in existence for years and can be used as an edge during uncertainty. Another thing is that it is less volatile than Bitcoin. And for someone who is a moderate investor or someone who is just getting started, I would say to focus on less volatile assets like gold. My mother-in-law used to love gold, right? And she used to buy a lot of gold. But the good thing about it is that by buying a lot of gold and keeping it, she has preserved that value of that gold. Because another thing you need to know is real gold does not tarnish over time. It is still valuable in 20 years, in 30 years, and you can go take that gold and sell it to someone and still earn money from it. Now let's put both side by side. This is Bitcoin and this is gold. Bitcoin is a digital asset. Gold is a physical asset. Even though now you can invest in gold on apps. I used the example in my previous video of how I invested in gold last year, but I did not own any physical gold. All of the gold I invested in was through an app. That's the differences. Bitcoin is high risk and highly volatile, and gold is lower risk. Not that it doesn't have any risk, but it is lower compared to Bitcoin. And then the last major difference is that Bitcoin is a younger asset, right? And gold is an older asset. So none of them are intrinsically bad or good. It just means that one has been in existence for a longer amount of time and therefore can be trusted a bit more, while one is of lower age and can be trusted a bit less. But again, it doesn't mean it is not valuable. It also doesn't mean that it will not be here for the long term just because it is new. A good example is where internet became something. If you had said at that time that because the internet is new, nobody should take advantage of it, we will not have things like Google will companies like Microsoft enjoying the benefit of actually going in and being the first people to really take advantage of the internet. So which one should you invest in and why? If I were you, what I would do is I'll prioritize understanding what I am investing in. So I've come to realize that a lot of people make investment decisions based on peer pressure or based on what is going good for other people. But you should always do your own research and make informed decisions when you're putting your hard-earned money into anything. So the first thing to do is do some research, find out a bit more, make sure you deeply understand both assets, their differences, and if you are excited to keep your money in them for the long term. Another thing to think about is the long-term stability. When you put your money in it, is it something you trust and can go to sleep that, this will be fine, especially if you are a low risk or moderate risk investor. For high risk investors, they don't mind putting their money into something super volatile. It can go up or go down, but they are willing to stay in for the longest term. So yeah, just understand what is the long-term stability of both instruments. Another thing to prioritize is if you can understand and explain them in simple terms. So another disadvantage I find sometimes is when I speak to people that are highly crypto enthusiasts, I ask them to explain it to me like I'm 5, and many of them end up not deeply understanding what it is that they have put their money in. So if you're going to put your money into something, you must make sure that you don't only understand it, you're able to also explain it to other people for them to understand. Personally, I believe that building wealth is mostly boring, is mostly long-term, personalized, and diversified. So if I'm going to put my money into crypto and assets like Bitcoin, I will make sure that it's just a smaller percentage of my bulk investments that is in that type of assets. I always jokingly say that putting your money in crypto or in Bitcoin has to be something that is done by people that have hit a certain threshold with their investments. So it can be a case of you saying, when I hit 5,000, 10,000, or 20,000 in my investments, I will put this portion of it in Bitcoin or in crypto in general. But most of the tips I say out there is just, oh, Bitcoin is going to the moon, this coin is going to the moon, and people are not truthful with you to say that do not put most of your investments into a volatile one. So even if it was gold that was super volatile, it's the same thing I will say in this video, that you should make sure that your investment portfolio reaches a certain goal, and then when you reach that goal, you can put a portion of that in that volatile investment. That's how a long-term investor should think. Because if you're an investor who puts in money into something and you always lose your money, you never get capital back, you never earn interest from it, you will not be excited to keep investing. And that's not what this channel is about. This channel and this video is to get you excited about investing, to get you to see results so that you can keep doing it for the long term. So the real argument is not Bitcoin versus gold. My major argument here is emotional investing versus intentional investing. My aim is that when you are investing, you're very clear as to the decisions you're making and the repercussions of those decisions as well. So as we end this video, I want you to know that you don't need to chase every trend. What you need is an investment plan that fits your goals, your values, your personality, your long-term goals, and your risk tolerance, which is the video I'll be making next, for you to figure out if you're a low risk, a moderate risk, or high risk investor. And if you forget anything in this video, I want you to remember this: borrowing money done consistently will always beat exciting money done emotionally. So be the investor that is informed, that is making the best decisions, and is aware of the responsibility on them when they make investment decisions. And with that, we've come to the end of this video. Please remember to like, subscribe, and share this with any emotional investor that you know. Till next time, take care and see you soon. Bye.